Welcome to the Daily Exchange, guys. We're talking about what you need to know before buying Bitcoin. Now, the word Bitcoin means two different things: the currency and the network. And it's really important to understand the difference. Similar to the way a New Yorker might talk about the subway, it could mean an individual train or the network as a whole. Bitcoin, the digital currency, is also known as BTC. That's what we talk about when we talk about the price of Bitcoin. This is what you are purchasing when you buy Bitcoin. The other thing Bitcoin can refer to is the Bitcoin blockchain, also known as the Bitcoin network. This is almost like a special, but very rudimentary internet that I guess exists just to enable the transactions of Bitcoin. It hosts the Bitcoin ledger, which keeps track of who owns what. This is done with the use of addresses. Addresses are where Bitcoin is stored, like, the numbers in your bank account. But unlike a bank, which will usually take your money and then invest it, loan it, or spend it, however it sees fit, a Bitcoin address is purely digital, and the Bitcoin that is stored there can only be accessed by the account owner. Also, when you withdraw money from a bank, it's not the same money that went in. However, with Bitcoin, the Bitcoin you deposit is the exact same Bitcoin that comes out. The next thing to consider is that an address is made up of two things: a public key and a private key. Think about it like this. The address is the vault where your Bitcoin is stored. The public key is the location of this vault, which people can use to send you Bitcoin. And the private key, similar to a password, is the key to that vault. Without the private key, the Bitcoin in the vault cannot be accessed. You could also think of it like an email address and a password, although in reality it's far more complex than that. But that's a good sort of analogy. For starters, your Bitcoin address uses cryptography. It cannot be hacked, and it isn't controlled or owned by anyone except the private key owner. This means if you make a mistake, there is no one to come and fix things for you. There is no Bitcoin company, no Bitcoin employees, no Bitcoin CEO, no Bitcoin customer service even. There's no one to call. This is because the Bitcoin network is completely decentralized, which means it is simply run by a bunch of code that is run on thousands of distributed servers, or what they're called nodes, around the globe. A bit like BitTorrent, there's no central place. Anyone can run a Bitcoin node, which means that there is no central point of failure. This relentless design is fundamentally why Bitcoin is so well trusted and secure. It is practically impossible to hack the Bitcoin blockchain, which is why so many people have chosen to store their wealth on it. However, this intense level of security obviously comes with a trade-off, which is that you need to be responsible for how you handle your public and private keys. So to recap, when someone mentions the price of Bitcoin or BTC, they are almost always talking about the digital coin. But if they talk about the Bitcoin blockchain, then they are referring to the network which enables the Bitcoin transactions. Number 2, do your own research. DYOR. There are a lot of people with a lot of opinions involved in the world of Bitcoin, but not all opinions are equal. Sometimes influencers with no experience in technology, finance, or journalism will produce content about Bitcoin and cryptocurrency and rise to the top on platforms like YouTube and Twitter, simply thanks to their social media hackery or skills. Therefore, it has always been advised to do your cryptocurrency research on your own. So DYOR. This is to remind people not to be so easily swayed by the opinions of others, especially those they have never met or who have no formal qualifications or experience in the relevant field. Thankfully, these days, the most popular coins like Bitcoin and Ethereum have been reviewed extensively by long-standing and credible media outlets, universities, researchers, governments, and I guess institutions as well. However, many newer coins, which have only been around for a few years or months, have much less information available about them. In some cases, the people behind these newer coins will leverage influencers to help market their product, hoping that the influencer's popularity will help to sell it. This applies especially to new and low market cap coins, which are often heavily marketed using social media and influencers, but lack much coverage by established media outlets. This is why it's always best not to take what any one person says at face value in cryptocurrencies. Instead, spend your time reading primary sources such as the project's white paper and interviews with the leadership team and developers, while also following news, partnerships, and announcements that come from objective third-party sources. However, don't stop listening to what others have to say, especially those who are experienced in the industry. Just make sure you're listening to a range of points of view that cover both the good and the bad aspects of the project. Unfortunately, doing your own research takes time, which is why it can be so tempting to listen to someone with 50,000 Twitter followers or whatever it may be. Fortunately, Finder's mission has always been to help people make better decisions, which is why we have a wealth of objective information on cryptocurrency, both on this channel as well as on our website. All of our content is written to educate, not influence, allowing you to leave better informed, to form your own opinions, and to make better decisions. We also follow strict editorial guidelines which have been formed after 10 years of experience in the financial services industry. You can find more information on that in the description in this video. Now that we've gotten through the tough stuff, let's look at some of the more interesting parts of Bitcoin that users often, get confused by. Despite the name Bitcoin, there are no actual coins, digital or otherwise. There's not even a digital file. Instead, coins are just the name given to balances in addresses on the Bitcoin ledger. Humans tend to like things that are familiar, which is why calling whole units of Bitcoin coins has seemed to stick. However, there are other names for smaller units. For instance, the smallest unit of measurement for a single Bitcoin is 100 millionth of a single coin. This is known as a Satoshi, named after Bitcoin's pseudonymous inventor Satoshi Nakamoto. You will need a wallet to access your Bitcoin. Bitcoin itself will always be on the blockchain and nowhere else, but as we mentioned before, to access the Bitcoin in your address on the blockchain, you will need a private key, and you will want to keep that private key as safe as possible. By itself, the private key looks like a complicated password made up of long string of numbers and letters. Unless you're a polymath, it's impossible to memorize. And even then, you might not want to because of other more complicated security reasons. So instead, specially designed digital wallets have been designed to keep private keys safe. Now, Bitcoin wallets come in several forms. Some of you download to your computer, and others exist on your smartphone as an app, while the most secure of all are called hardware wallets and basically consist of specialized USB sticks that let you manage your funds. It's a lot to get into, so if you want to learn more, you can visit Finder for a detailed guide on cryptocurrency wallets, including how they work, the different types, as well as reviews of the leading and most secure brands. You'll also notice that you can store your cryptocurrency on the exchange that you purchased it on. This is generally a lot easier than managing a wallet. However, it is widely advised across the industry to move your cryptocurrency into a personal wallet after purchase, as exchanges are frequently the targets of hacks, phishing attempts, and security breaches. You can find a link to our guide to hardware wallets in the description of this video, or I guess it's popping up in the top right now of your screen. Number 5, only invest what you can afford to lose. Bitcoin and most cryptocurrencies are highly volatile assets which carry a lot of financial risk. Despite Bitcoin being one of the best performing assets in the last 10 years, the price still fluctuates regularly, sometimes by as much as 20% in a day. From roughly mid-2017 onwards, this has meant gains or losses of up to thousands of dollars in a single day. Obviously, this means that there is a potential for high returns, but it also means a chance of financial and emotionally devastating losses. Therefore, you should never invest anything more than what you are willing to lose into Bitcoin or any other currency. In fact, many other cryptocurrencies are even more volatile. Some coins in the top 100 by total market cap have lost up to 95% of their value from their all-time high prices. Number 6, buying Bitcoin is easy, but using cryptocurrency requires lots of learning. Thanks to a maturing industry, Bitcoin is now relatively easy to buy. There are several services and exchanges that make the process as simple as possible, requiring no more technical knowledge than it takes to sign up for Netflix or Spotify. Picking the right exchange does take a bit of research though, just like finding the right internet plan or energy provider. Some services are as simple as what I've described above. Others, like exchanges, are targeted at amateur investors and traders, while others cater to accredited investors from Wall Street. So it's important to compare your options. Finder is a simple yet comprehensive guide to cryptocurrency exchanges, which allows you to compare anywhere between 40 and 70 exchanges depending on your region, where you are in the world, and I guess what coins you were looking to exchange or buy or trade. We also recommend several exchanges across a variety of criteria such as beginner-friendly options, fiat options, available coins, and trading features. Despite making it easy, we also stress the importance of selecting the right exchange based on your needs, what factors to consider when choosing an exchange, the types of different exchanges available, as well as how to get started and I guess what to do next. We also give a full review on each individual exchange listed, including a list of pros and cons to help you make a balanced decision. Now, as I said at the start of this segment, buying Bitcoin is easy, but using cryptocurrency requires lots of learning. Much of the technology being built with blockchain and cryptocurrencies is at the forefront of the industry. And it's like lead to, I guess, the next phase of the internet known as Web 3.0. And just like when consumers first dialed into the Web 1.0 in the early 90s, there's lots to learn. Whether it's simply using cryptocurrency for payments, earning interest with decentralized finance, or trading unique games, items, in a dApp, you can't just go running around without doing a bit of research. For example, almost all crypto transactions are irreversible. This means that sending your money to the wrong person or address could result in a total loss of funds. So whether you're just buying cryptocurrency to hold on to as an investment, or if you have plans to use it, make sure that you familiarize yourself with how it all works. As you can guess, Fund has plenty more written guides on all aspects of cryptocurrency, as well as a deep library of almost 400 videos on YouTube that contains guides, explainers, interviews, and deep dives to help you become better informed and make better decisions. So those are the things you need to know before buying Bitcoin. If you'd like to keep learning about Bitcoin, watch the next video in this series or select one from the list of videos in the description below. Do subscribe, do follow us, and we'll see you guys next time. Yeah!